Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is July 29th, 2025, and we're diving into Mondelēz International's Q2 2025 earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Mondelēz International, a leader in the snacking industry, has just released its second quarter results, and there's a lot to unpack, from revenue growth to strategic initiatives.
Revenue and profitability overview. Let's start with the top line. Mondelēz International reported net revenues of $8.984 billion, a 7.7% increase from the previous year. John, what are the key drivers behind this growth?
The growth was primarily driven by strong pricing execution, particularly in their chocolate business, and robust performance across most geographies. Organic net revenue growth was 5.6%, although there was a slight decline in volume mix by 1.5%.
And how about profitability? How did Mondelēz fare in terms of earnings per share?
Adjusted EPS came in at 73 cents, which is a decline of 14.5% on a constant currency basis. This was primarily due to higher raw material and transportation costs. However, the diluted EPS increased by 8.9% to 49 cents, thanks to favorable changes in mark-to-market impacts from commodity and currency derivatives.
Operational efficiencies and future outlook. Moving on to operational efficiencies, Mondelēz reported an operating income of $1.172 billion with a margin of 13.0%. What does this tell us about their operational performance?
The operating income saw a significant increase of 37.2%, largely due to favorable changes in mark-to-market impacts and acquisition-related items. Despite the challenges, Mondelēz has managed to maintain a strong operating margin, which is a positive sign of their operational efficiency.
And looking ahead, what can investors expect from Mondelēz in terms of future performance and shareholder returns?
Mondelēz has announced a 6% increase in their quarterly dividend, reflecting their confidence in future cash flows. They expect organic net revenue growth of approximately 5% for 2025, although adjusted EPS is projected to decline by about 10% due to cocoa cost inflation. Free cash flow is expected to exceed $3 billion, indicating strong cash generation capabilities.
EPS forecast and analyst expectations. John, let's discuss the EPS forecast. Analysts were expecting an EPS of 68 cents based on a survey of 10 analysts. How did Mondelēz perform against these expectations?
Mondelēz exceeded expectations with an adjusted EPS of 73 cents, beating the forecast by fives. This beat can be attributed to effective pricing strategies and cost management, despite the challenges posed by higher input costs.
What does this mean for investor sentiment and the stock's performance?
Beating EPS expectations is generally a positive indicator for investors, suggesting that the company is managing its operations well despite external pressures. This could lead to a favorable market reaction and potentially boost investor confidence in Mondelēz's future performance.
Key takeaways. As we wrap up, Mondelēz International has shown resilience in Q2 2025, with strong revenue growth and a solid beat on EPS expectations. Despite challenges, the company continues to deliver value to shareholders with a dividend increase and robust cash flow. John, any final thoughts?
Mondelēz's performance this quarter highlights their strategic agility and operational strength. While there are challenges ahead, particularly with cost pressures, their strong brand portfolio and global footprint position them well for future growth.
Thank you, John, for your insights, and thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch for more financial analyses. We'd love to hear your thoughts on Mondelēz's performance in the comments below.